Hello guys, it's that time of the week where we go over the watch list. It's Sunday the 8th. I hope you're all having a great weekend and you've got a great week planned ahead. So of course we are heading into the FOMC. It's not this week, but we are fast approaching. It's on the 18th, so we've got 10 days. So let's start. A lot of these trades are planned around FOMC and rate cuts. So whether we'll actually execute these before or after, I'm not sure. Obviously, this will be, I'll make follow-up videos and things, but this is currently what I'm looking at. So we've got pound US dollar. Now, the pound is actually being quite resilient. It's not necessarily in a bad spot to potentially buy. We could see a slightly further pullback here and correct this move on the pound index. And as for the dollar, we all know the situation with the dollar. I've made a few videos covering that already. So you can see here, I am looking for a pullback down to previous level of resistance into this, previous support, looking for a break and retest here up to the 1.36 level. So whether we'll see that or not, who knows? However, in terms of, interest rates, it seems like the Bank of England is going to be holding for now, and obviously we are getting rate cuts from the Federal Reserve. So just in that aspect alone, that's quite supportive for this. The data for the UK as well also seems quite healthy. Pound Australian, similar thing here. Now, I'm actually not super bearish on the Australian dollar. We do have Chinese data that is weighing on the dollar. We also have some commodities that are not performing too well, again weighing on the Australian dollar. However, in the grand scheme of things, I think the Australian dollar is okay. However, we are seeing this Australian dollar weakness come into this market recently here. So if I actually just go to the daily time frame here, again, we've got GBP data or UK data that does support to the long side. So I'm looking for this 50% pullback here. However, we have kind of already had this pullback as we moved to the upside, came down, retested this level, and now we're heading up. So I'm a little bit concerned I've already missed the entry here. So I am going to pay attention. Maybe the next plan of action here is a break and retest. So maybe we can break above, come back down to retest, and then continue to the upside here. So that's the next move. If we do see this clean break and retest of this level. However, obviously, ideally, I'd rather see a deeper pullback to this 0.5. Australian dollar Swiss. Now, I'm a little bit salty about this one. Someone on Trader Nick's stream, when I was having my segment there, pointed this out, and I said I wasn't too happy with it, but I'd be looking to sell. We do have this slight downtrend. We do also have this a retest, and it was literally, I'm not joking, it was literally on this bullish green candle right here. And I just said I wouldn't take it, but maybe shorts aren't a bad idea. And look at where we are now. So it is what it is. However, now I am looking to potentially go short. We draw from fib high to low. And again, we'd look for this 50% pullback. However, if we don't get this pullback, I'd be looking for this break and retest you can see here. Just into, not even really to correct the full low down here. It would be more sort of, midway down around here. Obviously using the fib extension for this one. But yeah, quite a basic trade on that. Euro Australian. Now I do particularly like Euro Australian. So what we've got is this trend to the downside. However, it looks like this is about to get broken. And if it does get broken, that's great for me, because that leaves us with this 0.5 as 50% level to enter off, along with this previous level of resistance. Now I've put some research in here. So this is what we call the trade center. This is the staff Discord. So this isn't where the members go. This is just for, staff. And I put this trade idea in here to keep in mind for a possible signal. If you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So what we've got is Euro weakness, the dovish ECB stance. The ECB is expected to continue with its dovish policies. Generally speaking, the Euro seems a lot weaker, a lot stronger than the, a lot weaker than the Australian dollar. So the RBA's tightening bias, while the Australian economy is facing headwinds, the Reserve Bank of Australia is still expected to maintain tight basis. This contrasts with the more dovish ECB, creating favourable rate differential in AUD. Commodities is basically saying that commodities could see some support in the near future. There's risk factors, of course, there's always risk factors to trades. However, we like to lay them out so we can obviously keep paying attention to them. So we've got the Chinese economy, because we know, we know that the New Zealand dollar and the Australian dollar rely heavily on China for imports and exports. And then we've also got global risks as well. However, this one looks pretty clean to the downside. So in terms of take profits, we could see a move further down to the negative 618 level. Now, just referring back to our chart here, what we have is the 24-year seasonality for the Euro Australian. So if we look from the end of September, we do have a slight move to the upside. However, the main move in October is to the downside, and that's into the start of November. So you can see it right here. So if we were taking these trades, you would have won 5. If you were going long during this period, you would have won 5 and lost 19. Obviously, we are looking to short, so that would mean we've lost 5 and would have won 19. So the seasonality does support this trade quite well. We might be a little bit ahead of the time. However, that's fine. You know, this is more into the end of September. We are currently the start of September. However, I'd be willing to take an initial position on this at low risk and see how it goes. Now, we've got the Australian dollar against the US dollar. And what I want to show you is something actually quite cool that we've implemented at Elite Traders. And this is called our research tab. Now, this is locked. You know, this is a password protected page. Only our members can get access, but I can show you guys on the YouTube video. So you can see here, these trade ideas are generated by bank reports. So we've got AUD USD long. The reasoning that AUD is sensitive to commodity prices and risk sentiment. While China's economic slowdown has been a headwind, the AUD is expected to recover if risk sentiment improves, particularly as the USD weakens on the back of Fed rate cuts. And that's Mufji and Goldman Sachs saying very similar things, so it's aggregated into one sentence. Commodities including copper and aluminium may see gradual recovery later 2024, helping the AUD given Australia's commodity-driven economy. Additionally, if China introduces further stimulus measures, the AUD could benefit from improved demand. And this one's from Goldman Sachs. A rebound in global equities, especially risk-sensitive markets, would further support the AUD's recovery, pushing AUD USD higher. Again, Goldman Sachs and Morgan Stanley have said that one. So, given the Australian dollar supportiveness there, along with the rate cuts more than likely coming into the US dollar, this one seems like a good trade to take to the upside. And this would also be a hedge for my euro dollar trade to the downside as well. And obviously our target would be back at this sort of previous high up here. So yeah, this trade looks pretty strong really to hold into the long term. So yeah, we'll see about this one. Now, the New Zealand dollar, US dollar, this is very similar to the Australian dollar, US dollar. So I won't go into that because they're very closely linked. However, I would be looking for a slightly deeper pullback here, or very similar to the Australian dollar, we'd be looking for the 50% retracement here into this 200 daily moving average. So I'm keeping a close eye on this. However, right now it's not ready to enter. Moving forwards, we do also have gold. Now I was in a gold buy not too long ago. Actually, I was in long from here, from this wick down, and my stops were at break even, so I was taken out at break even, which is quite unfortunate. However, I'm not mad about that. I'm not upset at all, because I am anticipating gold to move slightly to the downside and have some sort of correction or a profit taking dip, especially as we head into FOMC. However, you know, just because I expect it, that doesn't mean it will happen. And keeping that in mind, all of the global factors and even the US dollar do support gold to go higher. So I'd be more than happy to buy this market right where it is actually. And this one would be lower risk, just to obviously account for profit taking and US dollar volatility as we head into FOMC. Yeah, I mean, the long-term target on gold is definitely around 3,000, and this would be obviously a long-term target. This isn't like a swing trade or a day trade. This will be a position trade. However, I'm happy to start trying to get into this position now. And, you know, it might take a few attempts. We might come down lower, and as we hit more levels of support, I'll just keep buying it. You know, if we keep coming down, I'll buy here, I'll buy here. And I'll try and trail stops aggressively. So for example, in this position, as soon as I get the opportunity, I'll move stops to break even like I did previously. If we're stopped at break even, that's not an issue. We'll, you know, get out and reset. So the dollar CAD is next. So you can see, again, I'm going to pull up our research page here on the Elite Traders website. So we've got the USD CAD short reasoning. Canada's economic data, particularly the labor market, is expected to remain mixed. While slight job gains are anticipated, the unemployment rate is expected to rise, limiting CAD's upside. However, with the Fed expected to cut rates more aggressively than the Bank of Canada, the USD CAD could decline further. The market is pricing in more to 25 basis points cuts by the Bank of Canada by year end, with the Fed set to cut more aggressively. Short USD CAD positions are favorable as the CAD could strengthen against the US dollar due to rate differentials. And again, you can see HSBC and Unicredit. Oil prices, which are a significant driver of the CAD, are also expected to stabilize, further supporting the CAD in the short term. Again, there's Goldman Sachs. So USD CAD does seem pretty stable to the downside, so I'll be looking for this 50% retracement that we've almost got here. So I'll take an initial position possibly Monday once markets have opened and London session's gone, and I'll be looking for a move very similar to this. You can see also this is a really nice sort of retest of previous market structure. So obviously it was resistance through here, turned support, and now it's getting, or could be getting, retested. So yeah, that's about it in terms of, you know, what I'm watching this week. If you want to know more about the US dollar, I did make a video. It was a bit clickbaity, granted. It was will the dollar crash or something along those lines, and I went over a lot of data for the dollar, such as unemployment, wage growth, NFP, such you know, things like that. So yeah, I hope you guys have a great trading week. Of course, feel free to join the Discord, like and subscribe. Links are in the description. Thank you for watching. I will see you very, very soon.